Let me guess, you're either one of two types of people. Your agency is making money, but you don't have an accountant and you're trying to do it all yourself and really just hoping that everything works out at the end of the year. Or you do have an accountant, but you're really only talking to them once at the end of the year for your tax return, rather than working with someone that's giving you proactive financial insights and helping you make decisions based on your data. If you fall into one of these two categories, I have bad news for you. Without knowing your numbers, you can't scale. You'll have a general idea of how much your top line revenue is, but that's about it. Because of this, you won't be able to make the right scaling decision. So I'm about to show you how to make more money and pay less taxes without doing anything illegal. Right here, I have a couple of client testimonials. Not going to waste your time going over these, but essentially all three of these guys, 6-7-figure agency owners that are crushing it that are our current clients. So first off, why is having your financial processes dialed in crucial to your success? You don't just hit $100,000 months in your agency without any financial insights and strategic planning. You actually have to be incredibly intentional in regard to your business's accounting and finances. So imagine this situation. There's two people. I give both of them an address that they need to arrive to. One person has no technology. They're just raw dogging it. That's all that they're just finding it out on their own. Now the other person has the newest iPhone with Apple Maps, Google Maps, all the tech. So who do you think is going to arrive at the address first? It's quite clear that the person with no GPS or map is going to have a difficult time finding and arriving at the address if they're able to get there at all. Maybe they use road signs, maybe someone is nice enough to give them some directions, but at the end of the day, they're essentially hopping in the car and hoping for the best. Now, the person with the iPhone is going to have an incredibly more pleasant time finding their way to the address because the route will be mapped for them, how long it'll take them to get there. If there's any better routes available, they will arrive at the address much more quickly, efficiently, and pleasantly. You need to be operating your agency with a financial GPS, not blindly. And having your accounting, your reporting, and your taxes dialed in is that GPS for your agency. So without a doubt, everything in your agency becomes astronomically easier when your accounting and reporting is handled the right way. You make better decisions when the information at your fingertips is simply better. So before we get going, who am I? Why should you even listen to me or care what I have to say in the first place? So my name is Dylan. In sports, when I played college football and on Twitter, I'm more commonly known as Screech, but I own Sledge Accounting, and we currently work with 13 different agency owners, high ticket coaches, course sellers, really most any online business owners on a recurring basis in regards to their accounting, their reporting, and their taxes. I have my master's degree in accounting, and I have multiple team members that are all CPAs with well over a decade of experience. So here's a quick overview of everything we're going to cover. Basically, accounting that wins, right? So all 11 of these, let's just jump right into it. Well, the foundation of great tax planning. So this is one that really surprises people, but the foundation of great tax planning is actually great bookkeeping. Now, let me explain. So through great bookkeeping, we can ensure that tax deductions, also known as write-offs, also known as business expenses that qualify, we want to make sure that none of those fall through the cracks and get missed come tax time, because missed tax deductions equals you paying more tax than you needed to. And accurate bookkeeping also provides you with up-to-date information on your agency's performance and health, which can help you make better decisions. So here's what not to do in this regard. We don't want to mix business and personal expenses between business and personal accounts. We don't want to pay off personal credit cards with your business cards. We don't want to pay off business credit cards with your personal cards. The real message here is we want things to be separate. So how do we avoid this? How do we do it the right way? So first off, you need to have a business bank account set up, one that is separate from your personal bank accounts. And for most businesses, we typically just recommend one business checking, one credit card, one savings account. That is plenty for most agencies. If you're spending lots of money on ads or just have really high costs in general, sometimes, another Amex card or credit card for points can be beneficial as well. But you make sure that all business income and expenses run through these accounts. This is imperative. If you get one thing from this whole video, it is that. But once you have the separate business bank accounts, we want to connect those business bank accounts to a software called Xero. Now, Xero will automatically pull in all of your business transactions from your business accounts into their software. And from there, you categorize each transaction that comes through. This is who it was from, who it was to, the transaction category, why and how it was business related, just really overall everything to do with that transaction. Now, this allows for a few different things. It helps keep business and personal finances separate, like we just talked about. It helps ensure that those business expenses don't get missed, effectively helping you pay less tax. It keeps accurate and descriptive records to help protect you in the case of an audit. And then the data here can be used to create basic reports like income statements and balance sheets. Now, it helps ensure that business expenses don't get missed. How they can get missed is if you have a personal bank account, and you're spending business expenses in there, but you're not tracking it, come tax time, unless you go through and comb through all of your personal bank statements, which is absolutely horrendous to do, those business expenses are just going to get missed. Now, the other reason that we really love Xero is invoicing on autopilot. So a lot of agency owners, you get clients that are on a retainer basis, right? So you're sending invoices every single month. So in Xero, you can create and send repeating invoices that will send out as often as you need them to, whether it's monthly, quarterly, or yearly. And on top of that, Xero has a direct integration with Stripe. So when you combine those two powers, the repeating invoices plus the Stripe integration, you can offer for them to set up autopay for the repeating invoice. So if this means that if they opt in for the autopay, the invoice will be sent out automatically. They will pay you on the due date of the invoice automatically. And when the money hits your bank account, it'll automatically match the invoice payment with the invoice in the accounting software. Just absolutely huge. Awesome. So next is insightful visual reports for better decision making. This is where we take that next step, that bookkeeping is all dialed in. So now that we have separate business bank accounts, bookkeeping's clean, we are now going to take Xero and integrate it with Fathom. We're going to take it a step further. And it's an online financial analysis and reporting tool that integrates with Xero. And with Fathom, you can diagnose and track custom KPIs and easily analyze your financial performance, which in turn enables informed decision making. So how it works is you connect your Xero to Fathom, and Fathom will automatically import all of the financial data from Xero and pull it into Fathom, automatically generating a range of visualizations and metrics. And from here, you can customize your reports to fit your needs. So Fathom provides a range of reporting templates that you can customize to suit your agency and the metrics that matter most to you. And then from here, you want to analyze the data to make informed decisions. So this way you can quickly understand your financial performance and identify areas for you and your agency to improve. Now, it does come with a bunch of templated KPIs and graphs and charts and whatnot, but they do have the capability to do some custom KPIs. And so here's a couple that we recommend that you create and are some that we create for clients very regularly. So revenue per client, which is just your revenue amount divided by your client amount. Revenue per employee, which is just revenue divided by employee amount. Lifetime value. So this is, how long people stay with you and how much money they give to you before they churn, essentially. So it's the average purchase value multiplied by the number of purchase per year, multiplied by the average customer lifespan. And then profit per client, it's just your profit divided by your client amount, profit per employee, profit divided by the employee amount. All pretty simple, all pretty straightforward. You can do all of those in Fathom. So, each of our clients that we work with, we make sure they get a monthly performance report that gets published and sent to them. They're highly customizable, but just here I wanted to show a couple of examples of what some of these visual reports that I'm talking about can actually look like. So this first one is the cash flow report, which is huge. It's waterfall style cash flow report. It might be the most important one. You see here all the revenue that came in and then all of the money out and money in activities that we see free net cash flow at the bottom. That is huge. And then the next one, we have a profitability chart, and this is showing your margin of safety and your break-even point. Really just a great representation of your revenue, your total costs, as well as your earnings before income taxes. Really great visualization. And then from here is just a KPI report showing your results versus your targeted amount, or it can also be against your budgeted amount. Really solid report just to see your trend up or down from the previous period and whether or not you're hitting those KPIs. So moving on from there is analyzing the reports. Now you need to commit time to actually go through the report. None of this matters if you don't actually go through the data. And really, a lot of this is just accountability. Make it easy on yourself. Set a specific date of every month to go over it if you have to. Even better, set a day to go over it with a financial expert that's in your corner. Perhaps that's me, maybe it's somebody else, but you really just want to make sure that you're actually looking at the reports every month. And you would be shocked at how many business owners just straight up run away from this part of their business. They simply just choose not to look at their financial statements or reports. They're literally just hoping that everything's okay and that they're making money. Is ignorance really bliss in this situation? It's definitely not. Don't be this kind of agency owner. And these people end up using bank balance accounting. And bank balance accounting is losing accounting. This is when you use the balance of your bank account to determine how your business is doing. A high number in the business bank account, business is great. Low balance in the business bank account, business is terrible. And the problem with using your bank balance to determine the health of your business is that it doesn't in itself give you insights into the cash flows of your business. And 82% of businesses fail due to cash flow problems, not profitability issues. You can show a net profit on paper and still have no cash left over to support your business or pay your taxes. Net profit does not equal cash flow. And you avoid using bank balance accounting by reviewing the Fathom cash flow report and making decisions from there. And this is just one example, the importance of analyzing analyzing the reports and using them to make decisions. Really, there's many more. We could sit here all day and do that, but that's just one good example. It's time to develop some maturity. Leave the childish behavior behind. Take your business seriously and analyze your financial reports. Having your bookkeeping dialed in with separate business bank accounts, invoicing on autopilot, having visual reports, and then analyzing those visual reports to make the best decision possible, that's accounting that wins. Moving on to payroll. So if you have employees or you're the owner of an S-Corp, you'll have to be running payroll. And if you own a successful agency, you're almost certainly going to fall into one of those two categories, if not both. I almost never recommend that a business owner runs their own payroll. And there's a couple of reasons why. Really, a lot of it is the complexity. Tax regulations are intricate and frequently changing, and managing it in-house can lead to costly errors and compliance issues. It's very time consuming. Payroll processing involves a series of tasks from calculating salaries, making sure that withholdings are accurate. It just diverts the business owner's focus from the core business activities. There's risk of errors, so manually doing payroll calculations, you're prone to errors, which can lead to overpayments, underpayments, missed deadlines, and these errors can result in financial penalties, as well as, pissing off your employees. And then there's the legal compliance, so failing to comply with some of the labor laws can result in legal issues and financial penalties. Payroll professionals tend to stay up to date on those sort of things, right? And then there's the data security part of it, where, managing sensitive payroll data requires some robust security measures. Payroll professionals typically have these secure systems and protocols in place to protect employee information, as well as reducing the risk of data breaches. And then the record keeping, we need proper records to be kept, and because it's essential for audits and financial reporting, and the expert will be able to, maintain these accurate records, as well as reduce the risk of audit problems. And then audit risk, this is a huge one. This maybe should have been the first one, but really, if the payroll records are inaccurate or incomplete, it can lead to serious issues during tax audits, resulting in additional time and cost to resolve discrepancies. Payroll is high audit risk. It's easy to mess up. It's just really not worth doing it on your own and goofing it up. And then the last one is benefit management. So if you're doing stuff such as retirement contributions and health insurance deductions, this can get complex. It's just best to let the expert handle it. And there's really more. I could keep going, but for these exact reasons, I don't even run payroll for my own clients at my own accounting firm. We have a strategic partner that's a CPA firm that specializes in payroll, doing it for over 500 businesses in all 50 states, and they just knock it out of the park. It ran on time. It's accurate every dang time. We get the summary reports to do the bookkeeping appropriately, and on top of that, they prep and file the quarterly payroll tax returns as well. Having accurate and timely payroll for you and your employees, prepped and filed quarterly payroll tax returns, and accurate bookkeeping for all your payroll, that's accounting that wins. Just have an expert do it. Now, there are some common mistakes to avoid in regards to bookkeeping for the payroll. If you aren't an S-Corp, first of all, then you should not be paying yourself a salary through payroll. If you're an LLC, a sole proprietor, a partnership, etc., then you pay yourself through owner's draws, which is simply transferring money from the business bank account into your personal bank account. Now, when bookkeeping for the owner's draw transaction, a lot of people mistakenly categorize it as wages or salaries paid, when it should be categorized as an owner's draw instead. So here's a little diagram of how these payroll transactions should be categorized. So if you have an owner's draw, you're transferring money from the business bank account to the personal bank account to effectively pay yourself. This is an owner's draw. Now, if you're taking a salary payment through payroll to you, the S-Corp owner, this is officer's compensation. We call it officer's compensation because we want it to be a separate line item from wages and salaries paid to employees. Now, if you make a payment via payroll to employees, this is wages and salaries paid. And if you make a payment to an independent contractor, we just put this to contractor services. Basically, all in all, I have an expert handle all of your payroll needs. This is the way. Don't freaking do it by yourself. All right, on to some of the tax stuff. Understanding taxes and having a plan. So basically, as basic as it gets, the income you receive from business activities is going to increase your taxable income, and the business expenses from the business that are tax deductible are going to decrease your taxable income. So what even is a deduction? So according to the tax code, the IRS allows for the deduction of ordinary and necessary expenses paid during the taxable year to carry on a business or trade. And asterisk, I have a deduction reduces your taxable income. It is not money that is refunded to you at the end of the year. That is a tax credit. That's dollar for dollar. A deduction is not dollar for dollar. So an ordinary expense is one that is common and accepted in your industry, and a necessary expense is one that is helpful and appropriate for your trade and business. Now, ordinary and necessary terms that are super vague, I get it. Even with the IRS's definitions, there is a lot of gray space there. And as an agency owner, you honestly have quite a lot of stuff that fits into these definitions. There's also a lot of opportunities to be creative, especially if you're making content. I have a quick video that I made giving you some specific examples of deductions for agency owners. I'll make sure to put this link to the document in the description so you can check that out. But I had an accounting mentor hit me with this quote once, and she said, "Pigs get fed, but hogs get slaughtered. Now, what she was talking about, she was talking about tax deductions. Basically you want to be creative. You want to take what they give. You want to take all the deductions that make sense, that you can make a legit argument for being ordinary and necessary to your business. But don't be extreme or outlandish with it. The code is written to be advantageous to business owners. So take advantage of it. But, when you go too far and do stuff that is outlandish and just freaking out of this world, that is when you're going to get red flagged. You're going to get hit with an audit. Pigs get fed. Make sure you're taking advantage of it, but don't end up a hog and getting slaughtered. Now, documentation. You need to have some source of documentation for the business income and expenses that you're reporting on your tax return. You need to remember, in the case of an audit, it's on you as the business owner to prove that the expenses you claimed on your tax return were actually business related. It's not the IRS's burden to prove that they weren't business related. And there's a few ways that you can document your business transactions. You just need to understand, the more you document is the more you protect yourself, and the higher the likelihood that you'll pass an audit and have your write-offs be allowed. So the first level is just your bank statements. These provide surface level proof. And then next, you can make detailed notes when bookkeeping. So this is where you categorize transactions in Xero, and QuickBooks has a similar feature, but really having a very detailed description of what was purchased and why and how it was business related in this Y box right here can go a very long way for you in the case of a tax audit. And I've heard stories of people just straight winning audits just because they go through and every single transaction has a great description. And the reason we do this too, right? Because on your bank statement, say you spent $500 at Amazon or $500 at Walmart or something, right? On the bank statement, it's just going to say Walmart or Amazon, which effectively could be almost anything in the planet, right? So it becomes difficult to prove that that was business related by just through the bank statements. So then by having the detailed notes and the transactions when categorizing in Xero, this is what that gives that extra layer of, from Amazon, I bought these lights so I could make this YouTube video for business, right? So that's where kind of that comes in. And the level past that even would be just keeping receipts. And you don't have to physically keep them. Just having a folder on your phone or in a Google Drive, keep pictures of them is plenty. Example of this could be a business meal. So you had a business meal with an associate, and what you could do is write down on the receipt who you had the meal with and what was discussed, take a picture of it, put it in your folder, boom, done. And really just use your common sense best you can in regards to documenting other business expenses. Like another example would be like if you're going on a business trip, you could open up a Google Doc and just have an itinerary of all the different business activities that you're going to be doing while you're traveling to that specific location. And if you got audited, they're like, hey, how was this trip business? You whip up the Google Doc, boom, there's everything you did. There's pictures on your phone of while you were there of all the business stuff. That's like, okay, obviously it was for business, right? Same thing with a business vehicle. If you're trying to take the standard mileage deduction, you're going to want to log those business miles and be able to prove it. And really you want to super heavily document anything automobile related, because automobile deductions are one of the most commonly disallowed deductions. So now moving into some of the advanced planning. So I mentioned earlier that bookkeeping is truly the foundation of tax planning, but once that's dialed in, we can kind of start moving into higher levels of the game. And where that starts is entity optimization. And as far as tax planning goes, this is often the lowest hanging fruit. Just making sure that your entity structure is dialed in. So if you're at a lower level of the game, you're likely best off with an LLC with a separate business bank account, and you're good there. But as you move up and your net profit is starting to approach $100,000 per year, then it's time to consider making an S election and becoming an SCorp. So let me explain the SCorp a little bit. So an SCorp, the whole idea of it for the most part is to help you avoid self-employment taxes, also known as Social Security and Medicare taxes. Those are the same thing. So when you're an employee, your employer matches half of your Social Security and Medicare taxes. You pay 7.65% and your employer pays the other 7.65%. But when you become self-employed as a business owner, or even if you're just 1099, you are now responsible for paying that other half of Social Security and Medicare taxes that your employer was previously matching the whole 15%. So when you elect to become taxed as an SCorp, you're able to help mitigate this 15% tax. So as an SCorp, you pay yourself in two ways. You take a salary, you take a distribution or an owner's draw, like we kind of talked about earlier. But only the salary portion of your pay is subject to that 15.3 Social Security and Medicare tax instead of all of your net profit. So this can be a great option to help reduce your tax liability if you meet certain criteria. It typically should only be done and explored once you're for sure over $70,000 in net profit, and you 100% should talk to a trusted accountant before making this election. Here's a little graphic kind of demonstrating some of the potential savings. Say you made $150,000 in net profit. If you're just a normal ordinary LLC, you would pay $22,800 in Social Security and Medicare taxes in that situation, because that entire 15% is being applied to that $150,000. If you were an SCorp, you made that same $150,000, but instead you took $75,000 of that as a salary. Now that 15% is only being applied applied to that $75,000 salary. And then you only end up paying $11,400 in those self-employment taxes, effectively saving you $11,000. Pretty sweet if it makes sense for you and your business to go that route. Like I said, there's other factors that go into whether or not you should be an S-Corp, and you should talk to an accountant before doing that. But on a basic level, that is how you can save 4 to 5 figures in taxes just by having this dialed in. So optimizing your S-Corp salary. When you're the owner of an S-Corp, you are required to pay yourself a reasonable salary, whether or not your business is making money. So that's one of the reasons why you want to be over a certain net income level. But reasonable can be interpreted in a lot of different ways. And one of the ways we typically come up with this number is determining what it would cost to replace yourself in the business, given your role in the company, where you live, your age, your experience, your industry knowledge, etc. So this is a great baseline way of doing it, and it will definitely help reduce audit risk. And then past this reasonable salary, the other 3 considerations in determining your salary are mitigating those self-employment taxes, maximizing that qualified business income deduction, and then taking into account if you're making a retirement contribution. So this is kind of, some complex mumbo jumbo, but essentially your self-employment taxes, you owe 15.3% on the first $160,200, plus an additional 0.9% additional Medicare taxes on self-employed earnings over $200,000 if you're single, or over $250,000 if you're married filing joint. And then as far as the qualified business income deductions, if your adjusted gross income is over $160,000, it's the lesser of 20% net earnings from self-employment, or the greater of 50% of W-2 wages, or 25% W-2 wages plus 2.5% of unadjusted basis. And then max solo pay contributions, you have $20,500 in employee contributions, 25% of W-2 wages up to $66,000 of wages, and if you're over 50, you can make an additional $7,500. And I know that is a lot. That's a ton of complicated accounting stuff up there. Basically, we want to find what saves the most on tax overall between minimizing the self-employment tax liability while also maximizing the qualified business income deduction. So essentially, if you're going to net less than $160,000 in net profit, then you basically want to take the least amount of salary that you reasonably can. Now, if you're going to net over $160,000 in net profit, then it actually becomes more advantageous to increase your S-Corp W-2 salary amount to get a greater deduction from the qualified business income deduction. So it's really about finding that balance. Now, understanding how your situation affects your tax planning. So are you just trying to pay the absolute least amount of tax possible? If that's the case, then you want to show a low profit amount and you want to accelerate and accumulate expenses in your business. If you're looking to maybe sell the business and make an exit in the foreseeable future, or if you're wanting to take out any big loans, for your home or investments or anything within the next 2 years, then you're actually going to want to show more profit. This is another great saying. Everyone wants to pay zero tax until they go to borrow money and can't qualify for anything. Understand that paying your taxes is purchasing your borrowing power. Now, the power of tax planning over time. You've probably heard before that over the course of your life, taxes will be your biggest expense. It might not feel this way when you're at a lower net income level if you're just starting out. But as you grow into 6 figures and 7 figures, 8 figures, the hammer of taxes starts to hit hard. And that hammer swings for the rest of your life effectively. So proactively tax planning each year will save you so much pain from overpaying in taxes. Having an accountant in any capacity, a CPA, an expert, but not engaging in tax planning with them, it's like owning a high performance sports car and just keeping it in the garage and never taking it out for a drive. Just as the car's potential for speed and excitement remains untapped, having an accountant without utilizing their expertise for tax planning is missing out on the opportunity to optimize your financial strategies and save loads of money over your life. So understanding tax deductions, adequately documenting, understanding your situation, having an optimized entity structure, and annual tax planning with a professional, accounting that wins. So here's kind of how it all comes together. You'll have a business transaction, either money will come in or money will go out. It'll get pulled into the accounting software where you'll categorize it in the accounting software. We'll pull that into Fathom where we generate those visual reports. And then from those visual reports, we're going to make business decisions based off of those reports. Now your tax return is built from those year-end reports, that income statement and the balance sheet. And that is how it all comes together, from the day-to-day transactions to some of the bookkeeping to then those reports. Those reports, effectively your tax return is built out from there. There's other stuff that affects it on the personal side of things. But as far as your business, and if you're a business owner, the bulk of your income coming from your business, you need to understand that your tax return is largely impacted by what those reports look like. Now let's talk about the best accounting solution for your agency. So most agencies come to an inflection inflection point with their tax and accounting needs. When you don't have a business or you aren't making much money with your business yet, going to an accountant once at the end of the year to have them do your taxes is likely enough for your situation and gets the job done. The problem is once you gain a handful of clients and they refer you a handful more of high paying clients, you quickly outgrow the your accountant once at the end of the year model. And on the other end of things, hiring an in-house accountant is incredibly expensive if they're actually good and competent. Getting a CPA or someone with any amount of decent experience or industry knowledge, incredibly expensive. What most agency owners don't know is there's actually a better solution than both of these. It's a fractional accounting team, provides full service accounting, monthly visual reports, and unlimited consulting. And once you're past, I would say about $15,000 per month in revenue, you need a more proactive and responsive solution. And this model is the solution if you're making between $120,000 to $10 million in revenue per year in your agency. So going over some of these different accounting solutions, the pros and the cons. So just seeing an accountant at the end of the year only for taxes, it can be a lower cost sometimes, and it can't be a good solution if you're just starting out and you aren't at a very high revenue amount. But the cons is this is a super reactive approach to your accounting and not proactive whatsoever. Once the year ends, there's only so much that a tax preparer or an accountant can do to, really change your tax situation. For the most part, what's done is done. And then you're not getting any business insights throughout the year to help you make better decisions. These accountants that work in this type of model, they tend to be a little bit older and they're most definitely overworked, making them impressively unresponsive. And a lot of times you often still have to do your own bookkeeping and have to do your own payroll with this type of relationship. There's little to no peace of mind because you're going throughout the year really just hoping that your tax return comes out okay. This accountant might not understand your industry, your business model, and oftentimes they're just looking for your tax return to be compliant. They're not necessarily looking to put you in the best position. You're really just working with one person. On the next solution, hiring an in-house accountant, the pros of it is they're going to be responsive. They should be responsive. They'll mold into your business and your culture. They can help you streamline those account receivables, accounts payable. They can help implement internal controls if they're actually good. And this can be the best solution, building out an internal accounting team. If you're doing 8+ figures in revenue, you're probably at the point where you should have an internal team, but it is incredibly expensive. Like I said, you're looking at $100K plus for a CPA with experience. And this person might have limited experience in your industry, your business model. That's going to take time to onboard and train them and implement them. And you're getting one person. The next solution is a fractional accounting team. And this is what my accounting business, this is the model and the approach that we take with our client. And this is a proactive approach. So we're working in your business every week, every month, every year. I'm talking to you along the way. There's no surprises. You know exactly what's going on. It's a cost-effective solution compared to hiring in-house. You're going to get expertise in your industry and business model because we do, for the most part, exclusively work with agency owners, high-ticket coaches, core sellers, and people in that niche. We're extremely responsive because we're younger and because we don't have a million clients. We are very specific about the clients we take on. And that way we're able to be extremely responsive. You get proactive advice and insights while having everything handled for you. You're not left out to dry to do your own bookkeeping and payroll. We do all your bookkeeping. We do all your payroll. We do all the visual reports, help you analyze those visual reports, and we'll do your tax return. So you get peace of mind knowing that's all being handled, by a team of CPAs and accountants that have decades of experience. So I would say this is most definitely the best solution for businesses making between $120K to $10 million in revenue per year. Some of the cons, we are working with other clients. We're not solely working on your business, but the same could be said about that first, that end of year accountant. And it probably doesn't make sense from a financial standpoint until you're at least doing $120,000 a year in revenue in order to be able to afford the service. So in my opinion, my probably biased opinion, the fractional accounting team is definitely the way to go for your agency if you're between $120K and $10 million in revenue. And then we have this little Venn diagram. You want something that is responsive and proactive, an accounting solution that's actually going to answer your questions in a timely manner and actually give you proactive advice and an insight. And then you want quality work. You don't want your stuff sent overseas. You don't want your stuff done by people that have no idea what they're doing. So with us, you get a team of accountants with decades of experience providing top tier work. You want something that's cost effective. We're better than an in-house accountant for a fraction of the cost, and you get a whole team. Kind of just a no-brainer. So Sledge Accounting, our accounting firm, we we fit right in the middle. We hit all these marks. So just to do a little overview of what we talked about, this is accounting that wins. Having your bookkeeping dialed in with separate business bank accounts, having visual reporting on key metrics, and then actually analyzing the reports, having your payroll dialed in and handled by a professional, understand what tax reductions you can take, have a fully optimized entity structure, fully understand how your goals and situation affect your business and taxes, get a tax plan every year from an expert tax accountant, and have the best accounting solution in place for where you're at in your agency, whether you're at 3 or 4,000 a month, whether you're in that 120K to 10 million, and then whether you're, multiple 8 figures. And really the bonus is just having us do all of this for you. This is exactly what we do for a lot of agency owners just like yourself. If you want us to execute everything that we just went over in this document, this is exactly what we do for agency owners all the time. And we can execute all of this for you for less than 30 minutes of your time per month. Finding out if we're a good fit for each other and whether the numbers match up can really be accomplished on a short 15-minute call. You can go ahead and book in with me right here, right now in that document. I'll have it linked in the description. Thanks so much for watching. Start taking your business seriously. Incorporate accounting that wins into your agency today. Don't wait.